Welcome back to BLOCKTV. It's time for Power Blocks, where we sit down with some of the major power players in the blockchain and digital asset industry to discuss recent developments in their projects and hear their takes on the latest news and trends of the market. To do this, we are joined today in studio by crypto regulation analyst and vice president at BigTax, Youre Cohen.
Hi.
Hi, and of course, we are delighted to be joined by veteran Bitcoin educator, trader, analyst, podcaster, and all-around crypto celeb, Trace Mayer. How are you, Trace?
Oh, thanks so much for having me. Awfully gracious of you.
Of course, it's our pleasure. Now, you are the greatest advocate of, and I'm kicking this off with an easy one, you're the greatest advocate of not your keys, not your crypto, a movement I think many of us would like to see grow and expand, of course. Now, this is your position. Since exchanges, I would say, are considered to be relatively easy to use, right? So just that aspect alone kind of draws people in. While crypto wallets are considered to be, hot wallets, cold wallets, there are a lot of different user experiences that aren't necessarily easy. I would even say technologically challenging for some. How would you say holding crypto only on these wallets will affect crypto adoption?
Well, I think it's a critical thing to strengthen the decentralization and censorship-resistant properties of the various networks, whether it's Bitcoin or any of the other coins that you hold. And that means that you need to be running a full node and holding your own private keys. This is a way that you can invest in yourself. You develop the skills, the abilities, the human capital to be able to interact with the technology. And at the same time, you're able to contribute to the whole of whatever coin that you're holding. You're able to strengthen its network, all of these types of things. And so it's really multifaceted. It's not just about the exchanges or just about yourself. It's about strengthening the ecosystem as a whole. And so that's what I've started with the Proof of Keys celebration that we do every year, because Satoshi gave us this wonderful gift for monetary sovereignty, something totally scarce and immutable and censorship resistant. The technology got it out there, but it's going to take the political will. It's going to take individual action by all of us to keep it there. And so Proof of Keys is one of the ways I think that we can do that as an industry. And it also helps us stress test the exchanges. It helps us refine the different processes and procedures. And, it can also help weed out a lot of the bad actors. Last year, Proof of Keys, and then we had Quadriga CX and Cryptopia both fail. So, if you're first in the global coordinated bank run that's all on a single day, it might be better off for you, than if you're at the back of the line and choose either to stay ignorant about how to hold your own private keys or just remain too lazy to do it. So, this is an active thing that all of us need to participate in the crypto industry. If you don't want to participate in it to the degree that you're holding your own private keys and running your own full node, choose the level to which you are comfortable participating, if at all. But if you don't do this, keep in mind, you could end up losing some of your coins because you're trusting institutions or organizations that just aren't worthy of the trust.
Absolutely. So there is this, you've talked about this hacking culture, let's call it, or hacker culture, where in exchanges keep getting hacked and people keep doing the same thing and expecting it to change, like some sort of insanity, let's call it. But use the word lazy in there. I do want to kind of clarify a bit. So somebody being lazy, I believe, speaks to the fact that they understand or know, they have the knowledge to participate in the Proof of Keys movement, just with that alone. What would you say to users who don't have that digital knowledge or that digital literacy? How would you, or how do you think that they should come up to where you are in your knowledge in then joining something like the Proof of Keys movement without that knowledge?
Well, get it. Invest in yourself. This is about personal responsibility. If you want to be the king, if you want to be the monetary sovereign that's holding the private keys, where you decide when the Bitcoins move, not somebody else, you have to claim that. We live in a day and age where you have the freedom to be able to do that. People used to have to fight wars about this. When the French assignat collapsed, a little bit prior to that, they made holding gold and silver and using it in trade illegal under penalty of death. Like right now, all you have to do is like do a little bit of education and research and figure out how to hold your own private keys. You don't have to face death like they did, with the French assignat or the continental dollar when it collapsed in the Revolutionary War, or look at what's going on in Venezuela, or Hitler, Stalin, Mao, Franklin D. Roosevelt. They all made holding gold illegal. Monetary sovereignty is a massive, massive ability and tool, and you have to claim it. And so at proofofkeys.com, I've tried to, add in things there. We have a guide on Glacier Protocol. We have a guide on smart custody written by Christopher Allen. So do a little bit of education and do a little bit of research. But, if you're just going to be lazy, you're going to get wrecked one of these days. And, I can give two examples. One was a close friend of mine. We went to law school together. I helped her and her husband buy their first Bitcoin. I remember I walked them through everything. They had a blockchain.info wallet. They'd only bought about $100 of Bitcoin. When you only have $100 of Bitcoin, you only need to put about $100 of thought into securing it. Anyways, I told them, if you buy more Bitcoin, be sure to use Armory, a wallet that I funded because I wanted cold storage and hierarchically deterministic wallets, which we innovated at Armory. Anyways, I get pinged on Skype a couple years later, and their blockchain.info wallet was completely empty. And he was wondering what could be done or anything. And nothing could be done because the Bitcoins were already gone. Those Bitcoins today would be worth like $50 to $60 million. And in the Skype message, he said, I've just been procrastinating figuring out how to use Armory. Well, it doesn't really matter until it's the only thing that matters. And now they have to think about what could have been, because they made the right decision to buy Bitcoin, but they made the wrong decision watching Netflix or watching YouTube or going to the beach or whatever, instead of figuring out how to hold their private keys. This is a lesson in opportunity cost. Hopefully you can learn from their poor choices and consequences that resulted from that and make better choices in your own monetary sovereignty. Another example, another friend of mine, he had about $5 million on Mt. Gox. Mt. Gox failed and he hadn't figured out how to withdraw his Bitcoins out of Mt. Gox. So he lost all his Bitcoins there. Last time I talked to him a couple of years ago, he had been laid off for about 18 months from his job. His unemployment was running out. He had gotten in a car accident, so he had hurt his back. He's living on his parents' couch, doesn't have any money. And he's always going to have to think about what could have been. If he hadn't been lazy and if he had figured out how to withdraw and hold his own private keys with his Bitcoins instead of having them in Mt. Gox, he probably would have been able to claim over $1 million just of Bitcoin Cash and the other forks, right? But instead, he doesn't have any money now. And so a lot of people, they want the flower, but they don't understand that requires soil and fertilizer and weeding and tending and cultivating. The consequence is a flower. And so if you want monetary sovereignty and you want financial independence, you have to go through the process to cultivate that. And the consequence then becomes that. Nobody's just going to give it to you. And in fact, there are a lot of subtle financial interests that are opposed to you being able to claim your monetary sovereignty. Not just governments and regulators, but the exchanges themselves or the other participants in the ecosystem, because everybody loves to have their grubby little fingers on the private keys because they can lend them out or they can do fractional reserve or they can do whatever, so if you want it, come and claim it. And if you're going to be lazy, don't think that you're the king or the queen that's sovereign. Just realize that you're the slave, and that's what the architecture, the computer architecture lays up, because if you're relying on somebody else's full node, you're in a slave relationship to them on what they say a Bitcoin is in terms of the definition. If you're running your own full node and doing your consensus validation yourself, you get to say what a Bitcoin is, and your full node software enforces those rules. And when you hold the private keys, you make the decision on when those Bitcoins move, not someone else. So, you really, if you want it, come and claim it. If you don't want it, or you don't want it to 100% agree, maybe you have Bitcoins that are lent out, or you have them tied up in options or whatever, maybe you don't claim your monetary sovereignty on that small portion. But it's just vital that everybody at least be aware that they have the opportunity to do this. And that's another purpose or aim that I've had for the proof of keys, is we have so many new people that come into the space. They weren't here with Mt. Gox. They never kind of lived through a lot of these learning experiences. And so hopefully they can learn from the other people, and all the rest of us can help educate them on what they need to know and how to accomplish it or carry it out.
Well, you're trying to educate people and how to react with how to handle their finance. But the reality is that most people can, in the stock market exchange, in the fiat money, does not educate on the decision they are making. And it's probably what the SEC is trying to do for them. The regulator needs to step in order for them to understand what are they investing in. Now, let's say Libra, if Libra will ever go out, it's safe to say that people will not take the time to learn what does it mean for them and what repercussion it will have on the economy, maybe on their own pensions. They will just buy it. But what you're saying is you need to educate people. The thing is about education that you are necessarily approaching to very, very certain people and not to the mainstream. And don't you say this is a problem of adoption, because most of the people will not take the time to educate themselves and full node, it's a whole different level of education to know how to run a full node. So this is a barrier for Bitcoin adoption, don't you say?
Well, not all of the water buffalo make it across the river. A lot of them get eaten by the alligators. Bitcoin is a tool that helps you grow wings and just fly over the river and completely avoid the alligators. You can't print it out of nothing. It's immutable. It's censorship resistant. So, this is up to individuals. And I coined a term, the hodler of last resort. Who's going to buy something when nobody else will? Who's willing to hold it to nothing? That's the real conviction. That's the real hodler. And in order to have that type of conviction, you have to educate yourself. And so, what asset do you have that type of conviction about? Is it the stocks? Is it physical US dollar cash? Is it a gold coin? Like, what asset do you have that type of conviction about? Because we're in a very perilous financial situation globally. We have negative yielding debt on tens of trillions of dollars. We've got massive amounts of rehypothecation going on in the traditional financial system. The custodians are not trustworthy. You got to protect yourself. And I don't see another tool out there as powerful and as easy to use with as low a cost in order to secure that protection as you've got with Bitcoin. So, everybody gets to make their own decisions. And a lot of people value different things. They might value watching Game of Thrones or watching the latest Star Wars movie than investing in themselves and figuring out, what asset they should be a hodler of last resort with, and then how to go about executing that or doing that. But, you can't save everybody, and you can't babysit everybody, and nobody cares about your financial situation any more than you do. So everybody's got to take radical ownership over their own financial situation. And that's just the way it is. And if you don't do it and you get wrecked, you know, you're not going to have the consequence of the flower. You're going to have a hard time eating out. You're going to have a hard time buying the cars you want, or traveling, or spending time with family, or all of these other things that having a lot of financial independence and monetary sovereignty enable or empower you to do. So, you know, it's just, what do you want? And go and claim it is the way I look at it.
Right, harsh words, and I think an even harsher dilemma for users especially, and for folks out there trying to make it within the crypto space who need answers to a bunch of different questions and seeking that out. But then shifting gears here, you've created Mayor Multiple, a system to analyze Bitcoin prices in a historical context, you say. Now, how much can you actually gather from this historical data in terms of what will happen to the price of Bitcoin in the future? And do you truly believe that traders can rely on such a tool?
Well, first, I didn't create it. I created the methodology, which is taking the current price divided by the 200-day moving average to get a relative price. But it was my friend Preston at the Investors Podcast who actually coined the term. I wouldn't coin something after me like that. It's just not really what I do. But I think it's actually very helpful, because what it does is it filters out all the daily noise and helps you see the long-term trend. And so you can take that Mayor Multiple and you can look at it over time, and you can look at standard deviation bands, and you can find where there are good opportunities to buy and when there are good opportunities to sell, if you need to buy or sell for whatever reason. I like to filter out all the daily noise when doing that. I'm not really a trader. I don't like to trade on a daily basis. You know, maybe if I need a little bit of entertainment value, I'll go and try that. But I'm very much just a hodler. Over a very long period of time, a very Buffett-esque type of approach. You know, I hold it forever. So I better like what I'm holding and have real conviction and real understanding about why I'm doing that and how I'm doing that.
Which is then for the long-term value that this industry brings?
Well, yeah, I mean, you look at there are a lot of tweets out there like, oh, I just sold my Bitcoins at $3, you know, bought them for $1, sold them for $3, and they think they made a good trade. But, you know, they obviously didn't have the seven network effect thesis that I came up with. And sure, they might have sold at a high Mayor Multiple, but like, if you bought it at $1, and I mean, I started recommending people look at it and perhaps buy some at $0.25, you know, like you might have thought you were really smart, like buying it at $0.25 and selling it at $2.50. You know, why not sell it at $20,000 when it's like a 4.0 on the Mayor Multiple, well outside the third standard deviation, you know, and then perhaps buy some back when it's like $3,200 and at 0.5 on the Mayor Multiple, which is also outside the third standard deviation. And in the meantime, you've got a little bit of extra spending money. If you didn't, you know, even if you acquired your full Bitcoin stack back and paid some taxes, you're still going to have a little bit of spending money to you know, go have some fun. Or you can just use fork proceeds for spending money. So, you know, there's so many advantages to Bitcoin. And if you're just trying to trade it in the short term or even in the medium term, you're going to miss out on so many of the opportunities because Bitcoin is so highly volatile. And that's another reason I like the Mayor Multiple, because it helps weed out that daily volatility and then take advantage of it very strategically if you need to for whatever reason.
Now, on top of being a crypto celeb, as I said earlier, you are an accountant and a lawyer. What do you think about the fact that most Americans, Bitcoin holders, I'm saying here, do not report to the IRS?
Well, I don't know that we have proof that they don't report to the IRS. And the only people's taxes that I've looked at are my own. And I know that I report to the IRS and I pay a lot of taxes to them. You know, 7 figures last year and the year before that. And so, I mean, I pay a lot of taxes in this realm. And So I don't necessarily think that Bitcoin holders don't pay taxes if they have a recognition event. And I also, I don't want to be looking over my shoulder. I don't want the brain damage. So that's, primarily why I pay the taxes and recommend other people do. But, that's kind of all my thoughts on that. I can understand why some people might ideologically be opposed to it, but how much can Ross Ulbricht really do from a cage? So if we really want to be helpful to society, be useful, that might just be a price that one has to pay in order to continue to do what they do.
Okay, so Trey, I'm turning this over to Youre now. So Trace, is within the crypto sphere, says he pays his taxes, but claims that we don't, perhaps know if people are doing this. So can you, our tax expert here, obviously BitTax, break that down for us? There are new guidelines coming out later this year. Do you think that'll fix this problem? And then go back to the problem. Do we know that people aren't claiming they're, are paying properly to the IRS?
Right, you're right about that. The IRS hasn't published any official data since, I think, maybe 2 or 3 years, when it was 0.5% of people that actually report to the IRS, but it was earlier years. There is no official data, but there is data online and from CPA's office and from software that's saying that not a lot of people are reporting their cryptocurrency to the IRS. Up until now, there were some excuses like, I don't know how to do it, there's no really strict guidelines, which is basically some excuses because there is guidelines since 2014. But since we have now the new guidance and all those Q&A that instructs you exactly how to do it, and also we got 10,000 enforcement letters and who knows how many is going to come. So people will see that IRS is getting serious, and hopefully they will report their crypto assets to the IRS this season. And you have to remember that Trace is a celebrity, so the IRS can be on his back. But also, all the exchanges, the American one, are giving information to the IRS, reporting on maybe the biggest transaction of crypto above about $20,000 a year. They are reporting to the IRS, so the IRS, regardless if you are a celebrity or not, can get to you anyway.
Right, so I heard common ground here between Trace and Youre. Basically, at the very least, you should pay and do this all properly so that there's no headache later on. I think Trace would agree, just because how he answered that. But now, moving into something you said quite a while ago. You once said, I'm quoting here, I would like to see Bitcoin become encrypted so that all the investors in those AML, KYC startups basically lose their investments and Bitcoin goes dark. And then we have no idea what is going on fundamentally with Bitcoin, and it just begins corrosively eating away at all legitimately feasible economies. Now, claiming that this would further incentivize economic producers to move into the Bitcoin economy. Now I ask you, this was in like 2016, I believe, right before we checked this before, Bitcoin was something like $750 at the time.
Exactly 3 years ago.
Yeah, so there was no
December
hype.
2016.
So there was no ICO boom yet, there were no troubles, but even still, after all of that today, 3 years later, do you feel the same way?
Oh yeah, definitely. In fact, I think that we're going to be able to take even more territory in that particular realm of the monetary sovereignty war. I look at the war as we've had one major front, kind of like in World War II, you had Europe, and that's scarcity. What we need an immutable, scarce asset. And Bitcoin has proven that concept over the last 10 years. We've taken that particular territory and we're fighting and winning on that front. However, there's another front. I think that the industry as a whole now has the resources and the ability to really start taking and just opening an entire front, kind of like the Pacific Front in World War II. And that's on the privacy, fungibility, and anonymity. And there's at a technical level, there's kind of a fundamental tension between these because you don't want to be able to have hidden inflation. You don't want to, you can't compromise the scarcity aspect. And we saw this with even Satoshi in the white paper. He talked about how we have privacy, and the way that you could avoid this is by keeping the public key anonymous. Well, that's not really a solution, especially not with AML, KYC regulations and stuff like that. We need to have just completely fungible, digital, anonymous, censorship-resistant cash. And we've been able to make progress on this with things like Lightning Network and the onion-style routing in it. But still at the base layer, we're settling into Bitcoin, and all of those transactions, there's an address and there's an amount, and that's public and it's immutable in the blockchain. So layer 2 solutions are there, potentially layer 3 solutions like Chaumian and eCash servers that settle into Lightning Network, that settle into Bitcoin. We've got lots of advances. Then we've got other coins like Monero with ring signatures. Litecoin, played a big function with this in its early days, but now it kind of has lost its edge in that area. But even Charlie Lee wants to do Mimblewimble in the Litecoin extension blocks, which I don't really, and Monero wants to do Mimblewimble as a sidechain, and I'm not really much of a fan of implementing the Mimblewimble feature set in that type of a way. I think you could run into consensus issues, or at a minimum, you're raising the cost of validation and everything. I think Mimblewimble needs to be done or implemented at the base layer in a coin. And so you've actually got 3 implementations of that right now. You got Grin, Beam, and Mimblewimble coin, and then you've got other privacy options like Zcash, with zero knowledge proofs, but I don't really like that, or the way with that they're using homomorphic encryption because of hidden inflation issues or trusted setup issues. So anyways, the more choices we have in this regard, the wealthier I think we'll be. And having a lot of different projects that are working on the privacy, anonymity, and fungibility solution, especially with atomic swaps and Lightning Network and submarine swaps and other ways that we can creatively transfer the value and just make it a lot harder or more difficult or even impossible in terms of the technology and the cryptography, the way we apply it, to just make it impossible to be able to track or trace any of this stuff. I think that'd be great. And also, by having more solutions and more things that we're working on, it raises the cost tremendously on these AML KYC startups to, 1, try and keep up with the technology, but 2, just trying to implement or create tools to be able to track that stuff, And so I think that's great. Like, keep raising their costs, make it so that it's more difficult for them to actually be able to do these things, make it, fight it with economics and stuff like that. And so that's kind of how I feel on that area, because for me, the purpose or the aim is monetary sovereignty. And we've got, that's a spectrum. And even Peter Wolla made a comment about how privacy is a spectrum. And sometimes you don't want privacy, actually, for some reasons. So, Bitcoin is scarce. That's the big major front in terms of the monetary sovereignty. And then privacy is the ancillary or the additional front that we open up in the monetary sovereignty war. And I think that that's going to really heat up over the next, I think the next 10 years, we're gonna see huge advancements in innovation on both of those fronts. And I'm very excited about that because the current system, it's a burning platform. Like, why do you want to be involved with that? There's just way too much counterparty risk in that system, too much fractional reserve. People don't know who owns what. We need clear property rights, and Bitcoin helps do that. And then we need property rights that are invisible, so that we're able to maintain that privacy about the things that we own, because it's not really anybody else's business what you own. And I think that's important. So that the ability to keep those types of secrets. And so, those are the two big fronts in this war that we're fighting. And everybody gets to be on the battlefield. And instead of protesting like in Hong Kong or Venezuela or France, or like every country seems to have massive protests going on, protest with your money. If you don't like what's going on in their system, just withdraw all of your capital out of their system. Protest with your money. It's the boycotts that made the changes in the civil rights movement in the 60s, and that's where Martin Luther King was really able to exert a lot of pressure. And so let's do the same thing. Let's, if we don't like the current systems and the current establishment and stuff like that, vote no confidence and dissolve your monetary bands that bind you to them, and claim your monetary sovereignty. That's how you can really make a difference.
Show it to the man with your pocket. I know that Orlukai also has some thoughts on the matter. Please share.
Yeah. Well, I get your war to privacy, but not only that you are preventing crypto to have their way into traditional finance, but you are also making a safe harbor for terrorists, drug dealers, and many, many other criminals to use exactly the same solution you just mentioned. No, don't you bother by this? Don't you care?
As in, do you feel like this is a gateway to it? Do you feel like this devil's advocate question that Or is bringing up? Do you see that point as well?
No,
well,
I'm saying. Sorry, you put it well said, but I'm consciously these exact solutions are enabling drug dealers and terrorists to launder their money, to have some major, terror attacks, because they are able to hide from the authorities. Now, consciously, don't you have any problem with those solutions are enabling those people to take part of crypto?
Well, first, ideas can only be overcome by other ideas. And the principle of sound money is an essential check and balance in the political machinery against despotic inroads on the part of governments. Let's assume, look at the total number of people that have been killed by terrorists or by drug dealers. And then look at the total number of people that were killed by governments in the 20th century. Governments killed 250 million people. Like anarchists didn't kill 250 million people. Terrorists and drug dealers didn't even kill 250 million people. It was governments that killed 250 million people. And so, the burden of proof is on the people who want to empower governments with the ability to do stuff, to make the case that that's a good place to have that power centralized. If we can decentralize power, if we can decentralize money and decentralize all of this stuff, and actually have a free market on security services and on equity and justice services, then instead of monopolies, then we can get a higher quality of justice for a lower cost. Right now, why do you think everybody's protesting? Because the cost of equity and justice keeps going up and the quality of service keeps going down, because they don't have an alternative to choose from in the marketplace. And so, that's why everybody is upset. And so, sure, everybody can use math. What are you going to do? You're going to make math illegal? Society is so much better off because Copernicus and Galileo and Isaac Newton and all of these polymaths have been able to raise the standard of living of society by using science and technology and math. If you want to try and make cryptography illegal, that's what you're talking about. You're talking about making math illegal. That's not going to help society, making math illegal. That's what put us on the moon, being able to do math and physics and science. And so, these other issues that have to do with drug dealers, for example, look at Portugal. They legalized all the drugs, and drugs have come down, drug use and everything like that. It removes the profit incentive. by legalizing the drugs. That's one of the reasons the drug cartels are so profitable, is because when you make something illegal, that doesn't remove demand. It just raises the cost of the good and makes it more profitable, because there's the uncertainty that gets introduced with the potential prosecution and whatnot. And then when you're dealing with terrorists, I think that there's a book called Blowback, and I think that that's one of the primary reasons is U.S. foreign policy pisses a lot of people off, and you get blowback. Now, whether the cost that you have to pay is worth what you get in exchange for pissing everybody off, and the petrodollar and world reserve settlement currency and all that stuff, that's a discussion to be had in the political sphere. But when you look at the U.S. Constitution, for example, and the Declaration of Independence, we have a Fourth Amendment right against unreasonable searches and seizures. And it was the general writs of assistance that really pissed people off and led to the revolution. Well, look at the Patriot Act. Under the guise of terrorism, now they're scooping up everybody's data without warrants and everything. So the institution that's supposed to be there to protect our privacy and our property rights is actually the greatest threat to it. And so when you look at what we're doing with cryptography, the Fourth Amendment, for example, that's like PGP encryption, right? Okay, instead of having a legal code that says unreasonable searches and seizures, we just write cryptography and put the tools out there, use cryptography and put the tools out there to just make it impossible at a technological level to do a search or seizure. So in a lot of ways, the cypherpunks, and Bitcoin came out of the cypherpunks, we are laying down the new protocols. We're the new founding fathers of this digital age. And we're laying down the rights that we're able to claim in software code instead of just in. I think that's very important, because it's important for society to have these types of things. That's what made America great, is freedom of speech, freedom of the press, protection against searches and seizures, the monetary provisions of the Constitution. And we're able to implement these types of things. We have PGP to protect against unreasonable searches and seizures. We have, now you can broadcast messages on the Lightning Network and WhatsApp, with the satellite and other ways. So we're at a technological level, we're bringing censorship resistance to freedom of speech. And then with Bitcoin, and then with the privacy coins, we're bringing the power of the monetary provisions of the Constitution and laying them down in software code. And, the U.S. Constitution, it says the federal government can coin money, notice it's coin rather than printed, and only the state can make anything legal tender, but it has to be gold and silver. And if you think about it, gold and silver have the ability for complete anonymity built into them, because you can melt a gold bar down and recast it, right? So the founding fathers put these things into the Constitution intentionally. Why? Because if you're able to wield the monetary system against political speech and against religious speech and against other forms of speech, then that degrades the ability and the discourse that goes on in the public square. So not only is the anonymity and the privacy and the fungibility essential to being able to exercise one's anonymous speech, but we also have to have that scarcity so that they're not able to engage in confiscation through inflation, which is a form of taxation without representation or due process of law. And that's part of the purpose, part of the aim of proof of keys, is claim these rights, regardless of what your despotic government might do or try to do in restricting your ability to use math.
Yeah, there are definitely a lot of points in this debate specifically when you talk about privacy coins in particular. I think that's generally a point of debate and one that, like you said before, I think we'll have for the next 10 years while figuring out how things are going to develop and move forward. I'd like to thank Youre for joining us today. It was truly a pleasure having you. And you, Trace Mayer, as well. It's truly been a pleasure. Thank you for joining us. And for all you folks at home watching at blocktv.com, I'm Ron Spitzer. Keep on watching for more crypto and blockchain news.
For more news and updates, follow us on Twitter.